Hey everybody, Q here with another China Gold Oil Weekly Market Update for the week ending February 1st, 2013. And as always, we'll jump right into the DJIND, the old Dow representative that we look at here. And we can see last week we pretty much leveled off, didn't really go anywhere from Monday through Friday, although Friday we opened at the low, we closed at the high, and that was right at around 14,000. So that's pretty significant for a high potential of a sustained uptrend in the future. Although possibly there's a strong probability also that it will more or less level off around the 14,000 level and just kind of take a breather. And what it kind of wants to do right now is separate from this upper envelope that I use. So it might actually continue its separation. You can see last week it started to separate, and now it might continue its separation, stay at around the 14,000 level, and we will see what happens next. Now we'll check out the SPX. And looking at the SPX, we can see pretty much a very similar picture to the Dow, which is no surprise. Very strong indication at the end of a continued uptrend on Friday, more or less leveling off last week, separating a little bit from the upper envelope. No indication really of anything different than the Dow told us. And now we'll check out gold, GLD. And looking at the GLD, we can see a continuation of what's been going on, just trying to get above this 50-day and 200-day moving average, and it just doesn't seem to be able to happen. We keep bouncing off. The good news is we bounce down below it, but don't really go past the 160 level. That's 1600 for an ounce of gold, more or less. But it is consolidating between the two moving averages, the 50 and the 200 day, and the 160 mark. So it's consolidating between there. Sooner or later it's going to have to go somewhere, but we're not making a move until it tells us which direction it's going to go. But yeah, I'm looking for something to happen sometime. We'll see. Let's see if silver tells us anything. Alright, looking at silver, we can see more or less the same picture, except it's not, the price action is not stuck below the 200 and the 50-day moving average, but it is straddling it, up above it, down below it, up above it, down below it. So obviously the market has no direction right now, and again, just like gold, we'll wait and see what it tells us that it wants to do sometime in the future. Who knows when. And now we'll check out oil. Looking at oil, we see a continuation of the uptrend that began the beginning of the year. Again, it has not gone above the upper envelope that I use. It hasn't really even separated from it. It's been more or less touching it most days, not every day, but most days. So right now I don't see any indication that it would come off of continuing to hug the upper envelope. So there's oil. And now we'll check out the JJG for grains. And here is the 3-month grain picture. And looking at the JJG, we see a pretty obvious picture of what's going on here. We had this downtrend continuing, hugging the lower envelope, separated from it, and it's been playing with the 50-day and the 200-day moving average ever since. This last trading action on Friday is not a good indication. It does indicate to me a possible downtrend, more probable than an uptrend, because we did open at the 200-day moving average, played above it a little bit, and then ended up down below, closing below the 50-day moving average. So that's an indication to me that the downtrend will continue, and is a probability that the probability is stronger that it will go down as opposed to going up or staying flat. However, it might stay flat and play around with the 50 and the 200-day moving average for a week, see what happens. But we will be watching that price interaction with those moving averages. And now we will check out the FXI for China. Alright, looking at the FXI, what we're seeing in the past week or two is that it has separated from this upper envelope that I use. Kind of a minor consolidation, I would cause it, but it's separated from that. It's not exactly hugging it now, which is good after this strong couple of months of growth. It should slow down a little bit. So I'm looking for it to continue at this, like right under the 42 price action, and go from there, at least within the next week. And now we'll check out the EWH. Alright, and no surprise here, the price action in EWH representing Hong Kong is very similar to that representing China in general. So I'm expecting the same type of thing, more along the same price action. I don't see it going up or down within the next week. Let's see if the China consumer has anything to say. Alright, in this past week the China consumer has more or less continued its consolidation. Right now I'm looking for it either to go up again and maybe play with the 1550 level, or if it continues down or stays the same, it will possibly interact with the 50-day moving average sometime in the future. So that's the other thing I'm looking for. Maybe around the 15 level it'll interact. We'll see. And there definitely is a stronger probability that it will continue to go up as opposed to dropping down below the 50-day moving average, or even below the 15 price action. Alright, there is your weekly China Gold Oil market update for the week ending February 1st, 2013. Thanks again, hope you do get something out of this, and I will see you next week. Have a good one.